It is Monday, the 16th of March. This is a market update. I'm PJ Patterson, and wow, wow, wow is all I can say about what's going on right now. For those of you who are in the boardroom, you know I put out a flash alert. I should have put flash alert on it, but it was a flash alert that the Fed around, I think it was around 8:30 this morning, Australia time, cut the Fed funds rate by 1%, which is huge. That is a massive bazooka of an interest rate cut, and has indicated that the Fed funds rate is going to be between 0 and 0.25%. So I'm gonna go into that in more detail today. The top three things today are going to be number one, Fed funds and Fed cutting interest rates. Number two, volatility and what's going on in that space. And number three, how we need to manage risk in this environment. So managing risk is another way of saying how we invest, but I'm going to probably take it up a notch, which is to say really how we manage risk and do we invest in this environment. So all of these three things I'm going to hit today are going to lend into that conversation. So back to the Fed. Here's our buddy Jerome cutting interest rates effectively to zero. The band now is 0 to 0.25%, quarter of a percent. It's not a lot. It's unprecedentedly low. And they have also instituted a $700 billion quantitative easing program, and I think they're going to start buying assets and offering repo facilities and things like that this month with a $40 billion injection. So this is pretty serious stuff where the shit's hitting the fan basically over there. I think they're probably, the U.S. seems to, like, I don't know how much you can really follow from the media on this stuff, but it seems like the U.S. response to the COVID-19 virus hasn't really been aggressive until now, canceling flights from Europe, limiting the size of gatherings. Various states are calling for, people to have a, what's this term, social distance or something like that. I don't know, anyway, and all these sorts of things. So from what I can see from the COVID-19 virus, the health issues, there's a lot of misinformation out there about the effect of this virus. And pretty much from what I gather, and I watched a medical doctor this morning on a Facebook thing, sort of recap what happens to your body if you get the COVID-19 virus. And effectively, if you get the most severe reaction to it, so you are a person that might already have a lung issue, and it seems to mainly affect the lungs. This is the concern. It affects the lungs, and therefore it affects your ability to breathe, which further affects your ability to obviously get rid of carbon dioxide and input oxygen into your bloodstream. This is the most extreme of the COVID-19 virus issue, is that you get pneumonia, and obviously you can die from pneumonia. So it affects, again, those who already might have a weak lung situation. Smokers seem to be particularly affected, and people who are overweight or obese are also affected by, and people who have diabetes and so forth are really affected by COVID. Doesn't seem to be affecting children. And obviously people that are healthy and don't have a lung issue, they get sick, they feel like they have the flu, and then they recover. So I guess from the point of view that they're trying to stop the spread of it, I get some of these responses and reactions. Part of me thinks they should let it spread because the human body is a pretty fantastic organism and is designed to deal with the stresses of a virus or a bacteria attacking the immune system. And so my view is, and obviously I'm not a medical doctor, is that if you have a strong immune system and you look after your health and you wash your hands and you do all of the things you need to do to take precautions, then even if you did get sick, it shouldn't be any worse than getting the flu. So, and then you'll have an immunity to it. So anyway, I don't know. All of this stuff obviously will come to pass at some stage, and we will, in looking back on what we have learned from it all, we'll obviously learn something. So anyway, take whatever precautions you feel are necessary. Make sure that you're not just taking mainstream media as well. Sorry, I'm digressing on this for a second, but make sure you're not just taking mainstream media's point of view on this and doing your own research using Google and the such like, and try to find some alternative sources of analysis around truly what the medical situation on this is. So To wrap up the Fed, what's going to happen overnight is interest rates, they've already dropped. The market had not been pricing in a 1% interest rate cut. It had been pricing in about a 50 to 75 basis point cut at the Fed meeting. The Fed meeting hasn't even happened yet, so they've already done the rate cut, and the Fed meeting hasn't even occurred. Obviously, they're not going to cut rates again at that meeting. They've pulled the trigger now. But Treasury prices will go up. So that's good for pretty much all of you, because most of you, if not all of you, own treasuries, because I put them in your portfolio because I knew this was going to happen, in the sense that we could see the market signaling that interest rates were going to continue to fall. So what's going to happen to the stock market? Well, I'm going to talk about that. I suppose let's move on to point number 2, which is volatility. The stock market continues to be exceptionally volatile. And at the moment, the U.S. stock market, once this announcement was made, has gone limit down in the futures. Now, what that means is a circuit breaker. So after the financial panic and GFC in 2007-8, they put in some what they call circuit breakers, so that if the market trades to a certain level plus or minus, that it clicks off for a period of time. The first circuit breaker, I think, clicks it off for about 15 minutes. And then after that, it has certain time delays that it stops. So if the market begins to cascade lower, then it will at various intervals stop trading. Now, whether that's good or bad, I don't know, because it's sort of like if people are already panicking and selling, then stopping that for 15 minutes just gives them 15 more minutes to raise their anxiety levels, I guess. I don't know. Anyway, but volatility, and I've talked a lot about volatility, is one of the key things that you must look at and that I look at in this market environment, because volatility, I'm just going to show you real quick a chart on volatility here. I'm just going to bring it up again. Volatility, look at these green bars. That is insane, right? So you've got volatility pretty much somewhere between 10 and, let's say, averaging probably around 15 or 16 for the better part of the last couple of years, maybe 4 or 5 years, with some spikes up because of various market events will occur, but they come off fairly quickly, and then you get a huge spike. Like, this is a ridiculous run up in volatility. This is a monthly chart, by the way, so it condenses the time frame a little bit. But as you can see, actually, I'll just drop back to a weekly. That'll give you a bit more perspective on what this looks like. Remember what I've said before about volatility. It is episodic and it is concentrated. So you can see here previous episodes of volatility. Everything's fine, bang, until it isn't. You get a lot of volatility, then it drops right off. Same here again. Everything's fine until it isn't, bang, a lot of volatility, then it drops off. Those aren't unusual things to happen in markets. You don't expect vol to maybe go up to the 30s or even into the 40s, as we had this spike back in May of 2018. But it does happen from time to time. But this is an even worse volatility event. Like, this volatility has gone really off the chart. And we saw that volatility came back. I'm just going to go to a daily candle now. We saw that volatility dropped back down massively on Friday. Well, guess what? This bar, when we look at it, if I look at it again tomorrow or say Wednesday, this bar is going to shoot back up. It's probably going back up to 70, 75 range tomorrow. And that is owing to the fact, again, that the U.S. futures have gone lock limit down. Now, there's a lot of time between now and the market open in New York tomorrow or in the morning and late in the evening for us. So a lot could change between now and then, but I do think that we're going to see continued downside. And part of the reason for that is when the Fed cuts rates, or any central bank cuts rates, the first 1 or 2 rate cuts are sort of like, yeah, we expected that to happen. The economy was slowing, or something's going on in the economy. We need to get some stimulus in there. By the time they get to the 3rd, 4th, 5th rate cut, and if the rate cuts are getting even bigger, people aren't stupid and they go, holy shit, something is really wrong here. I'm out. They just go, no mas, I'm out. Get me to cash, or get me, to some safe haven style investment. And I think we're getting to that point right now. So this week could be a very interesting week, and we could see the market crash. I don't know. I'm not predicting that, but I'm saying with the volatility as elevated as it is, and the Fed doing this 1% what you could almost call a panic on the panic rate cut that they did the other day, last week, is giving us clear signals that we're in some very unprecedented and uncharted waters, and that this is very serious. So, final point: how do we trade this market? How do we invest in this market? The first thing is, and I know I've been very excited during this particular update. The first thing is don't panic. For the better part now of the last few months, I've had clients positioned for this eventuality. I've been saying to you repeatedly that we're headed into quad four. We're in quad four. Interest rates are going to continue to fall. And the best thing to hold at this stage was going to be US dollar, treasuries, and a bit of gold. Now, the thing about gold that has probably made me reconsider that position, and I'll probably take that off tomorrow or overnight, is that the volatility of gold has spiked above 30. And again, when that happens in any asset class, it is a clear signal that you probably need to be on the sidelines and away from that asset class. So gold has popped because of the trading in, sorry, not the trading, but the severe interest rate cut. Gold typically is a benefactor of a safe haven, but also with so much monetary stimulus, gold typically will respond and do well. But often what happens is, because an asset class has been doing very, very well, you see people sell those winners to cover margin calls and losses and things like that. And then finally, when you get that, just you're hitting the bottom of the barrel capitulatory selling, that's when they start to sell all their losers. So I don't know what's going to happen with gold over the next few days, but I'm certainly going to be looking to find an exit point on gold. And for the most part, get to the sidelines. So this market has, in my view, become almost uninvestable from the point of view that you would put on any equity positions. It's very likely this week that I will sell out of the treasury positions, because the Fed is they've just shot their final bullets, and the curve is going to be, at its steepest point, and treasury bond prices will probably be somewhere around their highs. So I don't care if I get the absolute, last uptick on the high. I want to be out of those positions with a profit, which they are. So I think the best thing to do right now is probably going to be to sit in cash. Happy to hold the US dollar. The Aussie initially went up on the Fed rate cut, but then I'll just see if I can grab you a quick chart of the Aussie. Then, what did the Aussie do? The Aussie, come on, give me a chart of the Aussie, please. Here we go. The Aussie dollar has then since just tanked. So again, this is a daily candle. We started off, and actually I'll just go to just to give you some perspective, I'll go to a 15-minute candle and just show you. So this is where this morning, where we were opening trading, and then all of a sudden we got that announcement of bang, the Aussie dollar opened up, which is probably a natural, reaction by the currency markets. Think, oh yeah, they're trying to devalue the US dollar. But then all of a sudden people went, oh shit, actually, wait a second, this is not good for the global economy. This is not a good thing that the Fed has just cut rates by another %. And they went, uh-oh, and they've sold off the Aussie. Because of course, if the global economy is a shit show, then, and if you think about the Australian economy, what do we rely heavily on? Exports to where? China, right? So if things, and the U.S. and other large industrial countries and Europe, so all of a sudden, if we're going to be in a massive global economic slowdown because of the COVID bringing forward all of that, then the Aussie dollar is not a great bet to have on. So anyway, that's why I think that's my back of the envelope analysis on why the Aussie dollar popped and then has come back down. So where the bottom is in the Aussie, who knows? I say that because I suspect, we've had cancellations of the Easter show here. They're starting to limit gathering sizes, which means, people aren't going to go to movies. They aren't going to go to sporting events. They're not going to go to things like the Easter show. What's that going to do to our economy? It's going to slow it down. People aren't traveling here now. They're being banned from travel. People have to stay at home for 14 days if they go overseas and come back. Who's going to want to travel now? So the flow-on effects of all this, you have to think this through. The flow-on effects of all this are going to be bad, and they're going to be bad for our economy. They're going to be bad for the Australian dollar. Again, all I'm doing is saying I think there's going to be a link to Australia having to also put in further rate cuts. So look, there was a lot in all of this. I've rambled for quite a bit about a lot of things. Replay this video, slow me down if you need to. Go back and listen to stuff. But here is just a basic recap of the situation. Number one, I'm going to do this in reverse order. Number one, I don't want you to panic because we've had the right positions on to make money in this environment or not lose money. And that's exactly what's happened. The market is probably, it's got another 10 or 15% downside here potentially. Who knows? I don't know that for sure. If it happens, it happens. But certainly there's a high probability that it likely will continue. As I've said before, an object in motion stays in motion. The path of least resistance is down currently. So that's why I'm putting a fairly high probability on that event. Something's going to come in and shift that. When that happens, it remains to be seen. I think it now will probably not be until the third quarter of this year. And in the meantime, what we'll do is we'll happily just sit in cash. Having avoided most of this carnage, if not all of it, made a little bit of money from treasuries and gold. And in due course, in a couple months, we'll be looking to bottom fish and buy stuff that's at a deep, deep discount that has, effectively weathered this environment without being too scathed by it. So that's kind of the playbook, I guess, that I'm putting on. Volatility, you'll hear me talk about this a lot, and I'll continue to do so until volatility comes down and relaxes. I shouldn't say relaxes, but comes down below that 30 level. I'm not even interested really in buying equities. There's one or two exceptions to that rule, but for the most part, equities, any equity is no mas, not interested. And then finally, keep an eye on the Fed and what they do in terms of quantitative easing, what the RBA might end up doing in the coming weeks, whether they do an out-of-cycle rate cut. So in other words, an out-of-meeting rate cut remains to be seen. So I will continue to leave commentary and updates for all of you. I really do appreciate your feedback. I appreciate your support, and I do hope that you are finding that this is comforting you, even though I am a bit excitable about these things because I absolutely love this. But if you do require any one-on-one conversations or comforting around what's going on and how I'm going to approach it, please do not hesitate to give me a call. I am very happy to have a one-on-one conversation. And actually, the final thing I'll say is I want you to get a little bit excited because, first of all, I have managed to preserve your capital through this shit. And what that's going to mean is you're going to be already 30, 40, 50% ahead of the curve when it comes time to buy stuff. And every one of these crises breeds opportunity and it breeds a recovery. And guess what? You're going to have a lot of capital available when the recovery comes. And we're going to make a shit ton of money. That's a financial term, by the way, a shit ton of money on the backside of this when we reposition for growth and all the other things that go with an economy that gets into recovery mode and gets started again. So think about that. That's a good thought. That's good energy. Let's figure out how do we get to that place as quick as we can. So enjoy the rest of your week. Hopefully you won't see me again, but somehow this week. But somehow I doubt it. And I will leave more updates and commentary as things continue.